So Jonathan Davis, okay, so the economics you've known for decades has changed, we all know that. We have moved from decades of falling inflation and falling interest rates to an era of higher inflation and much higher interest rates. It's called financial repression. At this presentation, you will learn how to succeed against what will be many, many years of high inflation. Jonathan Davis, BA, MBA, SC, lots of letters after his name, is one of the, if not the highest qualified financial advisors in the UK. So we are very privileged to have him here. Here in Hope. Don't test me. England, and Scotland and Wales and a bit of Ireland, Gibraltar, and totally awake. In 2007, he became known in the MSM. What's MSM? Yeah, we all know that. For predicting accurately the bust of 2008, the so-called Great Recession. He has over 1,000 appearances in the MSM over nearly 2 decades, so very well qualified to be here with us today. 2023 was about mild global recession and rapidly falling inflation. 2024 and beyond will be about strengthening the GDP? Well done, just make sure the economy. But also materially rising inflation, again like 2020 and 2020 to 2022. Since 2023, he has been calling for the biggest house price crash in decades. That's not good, is it? Because I'm trying to sell mine. Governments and central banks will print astronomically. They've done that before, haven't they? Furlough, they called it. Again, oh yeah. And inflation and rates will soar again. What you need to know, he will tell you. Over to you, Jonathan. Welcome.
Thank you. Time for lunch.
Yeah.
Who's not heard my Paris Hilton gag or story? Good. There's no children here. Well, there was.
Don't worry about it.
Paris Hilton made. It's okay. It's a 12 category, whatever you call it. Paris Hilton made a sex video in a hotel room. The poor parents. The shame. It was a Marriott hotel room. That broke the ice. I'm going to walk you through a history of economics for the last century, since World War II, recent years, where we are today, and where we're headed. Some of you will entirely disagree with my analysis. That's fine. If you do, please leave disagreements to the Q&A at the end. But if you'd like to ask me for clarification as I'm going through the presentation, because I'm using jargon, apologies, then do so. But disagreements to the end. I first started doing media just over 20 years ago, and I started right at the bottom. I literally wrote letters to the editor of my local freebie paper, the local rag. You couldn't start any lower than that. And 2.5 years later, I did my first TV. I had no contacts. Somehow I built contacts. I shook hands. I finally got television. 6:30 in the morning on a Monday morning. I got up at 4 o'clock in the morning, and after the shower, whatever, there was a Mercedes S-Class outside our house. My wife's there. We used to live in Hertfordshire, now in East Sussex, who whisked us down to West London to the Sky News Centre. I'm put into the room with the makeup ladies. They put paint on me. A couple of minutes later, there I am sitting in the studio. In front of me, Eamonn Holmes. They're on their adverts, so they're talking amongst themselves. He's got his co-presenter there, I can't quite remember her name. And I'm sitting there, shit, I'm just about to be on live TV. I'm going to fuck it up. 5 or 10 minutes later, talking about economics or something, I can't quite remember, it was done. They started reading from the auto cue. Someone said, run VT, the videotape. I'm quietly taken back to take the paint off me. I go back into that car. On the way, I met another B-list celeb, can't even remember his name, he's around still. Donald McIntyre. Never watched any of his programs. And the car, at that time, I was just developing my tiny little practice. And I didn't have enough for my own office. So I was working under the auspices of a larger company and paying them a lot of money for the office, for the desk and so on. And I asked the driver to leave me a couple of 100 yards from the office. And I walked in, I sat down at my desk, 10 past 8, just smiled. I've just done live TV. Amazing. And the funniest thing was, not a single person out of the 40 or so in the company knew a bit about what I'd done. Because if they had known, they'd have gone apeshit. Because I work in a heavily regulated profession, and there's no way they would have authorised me doing that. And indeed, I didn't mention the company's name, it was all under my name. And that was October 2006. Within days, I had decided to set up my own practice under my name, and indeed I started working under my name from the 3rd of January 2007. I remember the date because it's the first day of the new business year. I was building a reputation in the media in 2007 for saying things that the normal talking heads in the media don't say. And indeed, often, whether it's a radio or telly, and I'd be put up against some, what I call red braces crowd from the city. Oh yes, everything's spiffing, invest your money, you're going to make a fortune. I'd be saying, actually, the world's going to hell in a handcart financially. So the reputation I was building for the producers and the presenters was I was this strange Scottish guy who had this tiny little practice from Hertfordshire, working from his proverbial back bedroom, so who they'd have on to laugh at, because I was saying something entirely different to what literally everyone else was saying. I was the joke guy. Anyone remember what happened in finance in December of 2007? Excuse me? No, that wasn't then, no. December 2007. It was indeed Northern Rock. The first banking collapse in the UK in around 150 years. Through depression, recessions, 1970s superinflation, 2 world wars. The first banking collapse in 150 years. The producers and the presenters stopped laughing. 2 or 3 months later, not that many people in Britain know this, but in early March of 2008, Bear Stearns, one of the most prestigious, quote-unquote, investment banks on Wall Street, went bust. They got it taken over by JP Morgan, put under the carpet, and indeed there was a bit of a lull then through the rest of the spring and the summer. Indeed, the stock market rose. Just on that point, the stock market in fact peaked in October 2007, So it went all the way down, and then post Bear Stearns, it started rising again. And yours truly was in the media all the time in 2008 saying, we're still going to hell in a handcart. Very few people were listening. And then, as Pete said, in September, so everyone's back at school, back at college, September 2008, Lehman Brothers, the 5th largest investment bank on the planet, went bust. 3 weeks later, AIG, the largest insurance company on the planet, went bust. It was the biggest financial collapse in history. Bigger than tulips, bigger than .com, bigger than anything you've ever heard of. Clearly, my thesis was proving entirely accurate. I didn't know when it was going to start. I didn't know exactly how it was going to play out, but it was pretty clear. It's a bit like us doing a little bit of research and just looking behind the headlines, and it actually was entirely obvious if you asked the right questions. And the principal reason why I was saying what no one else was saying was because I worked for myself. I didn't have some board of directors or some guys above me. I was the me. And if it worked, great. And if it didn't, then I only had myself to blame, as it were, and it would cost me financially. But I knew my analysis was sound. And indeed, because every couple of months apparently there was something new in the headlines, you may not recall, but house prices kept falling in 2008. They fell 20% in that year. So I was invited again and again, sometimes 2 or 3 times a week, to talk in the press or the radio or the TV. Less so for the TV. Clearly, I've not got a face for TV. One particular media event sticks in my mind, is worth mentioning. I was about to go live with on the British Bollocks Corporation with that lovely man, Jeremy Vine, on Radio 2. It's actually not about him, it's just that was the programme. And I walked into, everyone knows what the green room is. Yeah? I walked into the green room, there was a bloke there, I knew I was going to be up against a guy. I was the free market, the capitalist. I knew there was going to be a socialist, a Marxist. I walked in, hello, are you Patrick Murphy? I'm Jonathan Davis, how do you do? His response, you're a fucking bastard. Marxists are such lovely people. And of course the objective, that this is what they do, was to put me off my stride. Well, I held my own. And to give you an idea of how pathetic the media is, not that the people in this room need any more evidence. Professionally, my practice was going great guns. I trebled my practice from the beginning of 2007 to the end of 2008 because of the things that I'd been saying in 2007. People were watching, then Northern Rock happened and Bear Stearns, so people started contacting me because they knew I might actually know some stuff worth knowing, worth hearing. By the end of 2008, we were a massive company, massive. There was 3.5 people in our company. This is how pathetic the media is. I became the go-to guy for the UK media for what's going on in economics and markets. Me, working from my proverbial back bedroom, this tiny little firm in Hertfordshire. Not the city, not the skyscrapers. Because I was the only one they could find who was actually saying what was reality. That's how pathetic the media is, as you well know now. And of course, what happened post-Lehman's, post-AIG, the Swiss banks, the French banks, Greece, Ireland, everything collapsed. What happened afterwards? They bailed every bugger out. They bailed the billionaires out. They bailed the bankers. They bailed the depositors out. I've still got clients today who, this was before my time, as it were, but they had a lot of money in the Icelandic banks. You may recall the entire Icelandic banking system collapsed. There's no way on earth that these people should have been bailed out. There was no taxpayer guarantee for foreign bank deposits. UK, but not foreign. Homeowners were bailed out. Some of you, many of you were bailed out. They slashed interest rates from 5% to 0.5%. And they kept them there for the next 14 years. In my naivety, so 2008 I was 45, in my naivety, it didn't occur to me that in a million years, with businesses going bust left, right and centre, that the response would have been that everyone else, the next generation, and the generation after that, bails the current people, the current billionaires out. Well, I became less naive. And indeed, I decided about that time that when I eventually die, you're listening, Sue, when I eventually die in the next 100 years, I want my headstone to say, the world is corrupt. Compare that to 1920-21. Everyone knows about the Depression in the 1930s. This will surprise you, I believe. Practically no one knows this, because of course they don't want anyone to know. But in 20 through 21, in America, America's economy fell practically a quarter. And what was the policy response? They let the big businesses go bust. And then you had the Roaring Twenties. Compare that to the stock market collapse of 1929 to 30. The US stock market collapsed 90%. And what was the policy response? Well, Treasury Secretary Mellon, like our Chancellor, he said to the President Hoover, we ought to do what they did in 1920-21. Let the thing collapse. Reboot the system. Everything will be much cheaper, and those who've still got some money will be able to buy cheaper, invest cheaper, and we'll get things going again. No, Hoover's a communist. So they bailed every bugger out. So hence we had 20 years of depression, which we didn't get out of until the 1950s, and it was not because of World War II that it was extended. It would have been the 1950s irrespective of the war. Anyone who believes that the bailouts represents capitalism needs to do some research. It's the opposite of capitalism. It's socialism, aka Marxism, aka communism, aka feudalism, aka globalism. Because capitalism without bankruptcy is like Christianity without hell. And all that brings us to a point in time which no doubt stands in infamy for everyone in this room. Early 2020. Now, I'm not here to talk about the global war on the populace. And surely there's no coincidence that thousands of sports people are collapsing on their sports fields no coincidence at all, that while the powers that be in 2019 were playing their war games and their rehearsals, the bankers, the central bankers, the Bank of England, European Central Bank, Federal Reserve, etc., and the politicians were also meeting to introduce an era of what we call financial repression. I might just say that in 2021, I radically altered my headstone. Does anyone remember Hitchhiker's Guide to the Galaxy? Early on in the story, Ford Prefect whisks the Englishman in the dressing gown up to the Volgon, whatever.
Volgon.
Thank you. Spaceship, because the Volgons were going to destroy Earth. And the Englishman says, "What's going on? Who are you?" "Well, I'm Ford Prefect. I'm a contributor to the Hitchhiker's Guide to the Galaxy." "Well, what's that? What does it say about Earth?" "Well, it's been radically altered from the first edition." "Well, what was in the first edition?" "Earth, harmless." "Well, radically altered. What does it say in the second edition?" Major change. "Earth, mostly harmless." So I've radically altered my headstone now to, this is 2021, and we know what was introduced then: the world is corrupt and evil. I said reintroduce financial repression. The first time we had financial repression was when the same crowd, the bankers, the central bankers and the politicians, met in 1946-47. And they were horrified about the amount of debt that had been taken on to pay for the war. Well, thank goodness they did, because many of the people in this room wouldn't be alive, and we certainly wouldn't have had the relative freedom that we had up until 2020. And the amount of debt itself is not the issue, it's the ratio of debt to the economy, debt to GDP. It was 150% of GDP, and that was horrific. So what they decided to do was bring in, amongst other things, inflation. Because inflation doesn't just happen. In fact, if the politicians got out the way, we'd have deflation year after year. Everything would get cheaper. And what does inflation do for their objective? It allows the economy to grow, but the debt rises more slowly. So from 150% of GDP by, for simplicity, 1980, we got down to 100%. So think about that. It took them over 3 decades to get from 150% debt to GDP to 100%, over 3 decades. And they deliberately did it slowly so that the people wouldn't realize what was happening. Until, of course, the 1970s. So the 1950s, inflation is very shallow. You get millions of men demobbed who will take any work whatsoever at whatever wage. Inflation started picking up in the 1960s. Some of you may remember or have heard of Harold Wilson devaluing sterling, pound sterling, 14% overnight. The pound in your pocket will be unchanged. All of a sudden, everything we imported was 14% more expensive. And then, of course, we go into the 1970s. Do you want to? We go to the 1970s when we got a peak of inflation at 25% per annum. Again, some of you may, like me, just about remember having dinner one evening in candlelight because we ran out of power. There was a general strike. Why? Because, of course, up until the 1970s, we were a communist country. Clearly, we're going back to that. Because the state basically owned everything and employed practically everyone. The power workers, the electricity, the gas, the coal, the transportation. And year after year, as inflation soaring in the 1970s, the Minister of Works, or whatever the term was, would offer a wage rise materially lower than inflation. So year after year, the standard of living of the workers was falling. And eventually the workers rightly said, enough's enough. Now that was actually the peak in inflation and interest rates, which got up to 15 to 20%. Of course, since 1980 or so, inflation and interest rates then fell for decades. So we had 3.5 decades of rising inflation, rising interest rates, and then we had 4 decades of falling inflation and falling interest rates. Now you recall that the powers that be were horrified that debt to GDP in 1946-47 was 150%. Well, in 2022, it was 300%. And just considering that for decades inflation and interest rates fell, you believe that house prices rose like that just because? No. House prices soared like that because interest rates collapsed over 40 years, and also banks lent more, debt soared. Debt was 100% of GDP around 1980. By a couple of years ago, it was 300% of GDP. So inflation and interest rates are falling for 40 years, roughly speaking, from about 1980 to about 2020. And it's in 2019, as I say, that they met and decided to bring back financial repression. And it started in April of 2020. And what have we seen in the last few years, couple of years? We've seen interest rates soar. We've seen inflation soar, the cost of living, the cost of doing business. And how do I know that financial repression number 2 started in April 2020? The oil price on global markets peaked in 2008, just before Lehman's, at just under $150 a barrel. There was a quirk in the system, but in another way of looking at it, it was understandable that it happened. But there was a week in April 2020 when the price of oil went to 0 per barrel. Technically it went negative, won't go there for now. It went to 0. Apart from a day or two, you can't go any lower than that. That was the spring of 2020. 2 years later, we had $130 barrel of oil. Just as an aside, as part of the brainwashing, they wanted everyone to believe that the reason why energy went through the roof is that nasty man Vladimir Putin. When in fact, of course, the NATO, UK, US, Ukraine war and Russia started in the spring of 2022, after oil had gone from 0 to 130. And incidentally, over the next year, oil went down to the $60 per barrel, during which there was still that raging war. So that's part of the brainwashing. So inflation soared from 2020 to 2022. Indeed, in October of 22, we got a month's statistic of CPI, of consumer inflation, which was the highest percentage that we'd seen in this country in 41 years. Now, oil came down, other things came down, and the rate of inflation has abated since then. It fell consistently for the next year, and it's been gradually, slightly trending up since the end of last year. What we can expect is 2020 inflation's down there, it's zero. Inflation soared for a couple of years, inflation's abated, inflation's now rising, and we can reasonably expect for the rest of this decade, the 2030s, and probably the most of the 2040s, because remember, it was 1947 to 1980 for them to end their financial repression Mark 1. So we're looking at roughly 25 years of high inflation. I mentioned to Pete earlier, in a funny, that in the year 1799, they introduced a temporary tax. It's called the income tax. Most people believe the income tax is the biggest tax. It's not. Anyone know what the biggest tax is?
VAT.
No.
Inflation.
Thank you, well done. Because it's the thing that they don't talk about. And it's the way that they achieve that the politicians and the bankers get out of the mire that they put us all in. Check my notes. Yeah. And let me assert that there is not an example in history or geographically across the world where inflation has brought prosperity for the people. Deflation brings prosperity for us, the bottom 90%. I'd love it myself. You know, you have your views. I'd love it if food was cheaper, energy was cheaper, filling up my car tank was cheaper, mortgages were cheaper, rents were cheaper, holidays were cheaper. My standard of living would rise. But they brainwashed everyone, particularly from 2008 to now, when suddenly they introduced this inflation target of 2%. Never in the history of central banking had a target of above 0% inflation. Now, I'm not saying they achieved it, but the target was always 0% inflation, stable money. But instead, after 2008, with all the money printing, the quantitative easing, the bailing out, they knew that if they didn't take action, we were going to go into deflation in the 2010s, which would have been great for us, but it would have put the billionaires and the bankers into penury, because they love inflation. They love it. So they brainwashed everyone into believing that mild inflation is a really good thing. It's not. They changed their objectives from stable money to, if you think about compounding 2% a year, they actually wanted your wealth to have every 22 years. Inflation makes the elite, or as I call them, the parasites, richer and more powerful. So how does financial repression, which we've now been in for the last 4 years, affect us? Well, first of all, I've gone through it. Inflation. And if you think about the decades up to 2020, particularly 1990 to 2020, 3 decades, 28 of those years, inflation peaked at 3%. For 2 of the years, inflation went up to 5%. We had low inflation, low cost of living rises for 3 decades. Now, really look inside and tell me that you didn't feel more prosperous by the 2010s, after the 90s, the 2000s, the 2010s. With lots of things getting cheaper by the year, by the decade. Primark, Aldi, Ryanair. The fact that Ryanair's shit, but Ryanair. Food got cheaper. Clothing got cheaper. Holidays got cheaper. Electronics, and so on. I remember on a podcast saying that, I haven't got my phone with me, imagine I'm holding a phone here. It holds 25 different things that we used to spend thousands of pounds on in one item. Scanner, camera, telephone, recorder, calculator, you know what I mean. That's deflation. That's good deflation, good technology. That was 30 years of low inflation. Now, and therefore, we had between 0 and 5% inflation for 30 years. Now, reasonably expect for the next 20 plus years, inflation to do a step up to 5 to 10% per annum. Some months and years it'll be below 5, some months and years, perhaps years, particularly it'll be above 10 to 15, but reasonably expect 5 to 10. Some people believe we're going to have hyperinflation, Project Zimbabwe. I disagree. I think that will annihilate the Western powers that be. So I do not believe that we will have hyperinflation. And remember, financial repression impoverishes people slowly. So I believe that they will take action to keep inflation to, shall we say, a manageable level. But what it will do is it will reduce debt to GDP over 2 or 3 decades. One of the other tricks that they will pull, as they did in the 1950s, they will mandate financial institutions, insurance companies, pension companies and the like, to buy bonds. In other words, they will mandate these institutions to lend money to the government. I'm not going to go into the technicalities, but the result of doing so is it will keep interest rates to a manageable level, as opposed to go up to 30-50%. It'll keep interest rates to, shall we say, 10-12-ish %, more or less, over the next 2 or 3 decades. You think house prices are going to do well? We used to have 1-1.5% interest mortgage rates. Now they're 5, 6, 7%. And if the banks are lending money to the government, there'll be less money for property to be loaned. You think property will do well? Also, insurance companies and pension funds who will be mandated to lend money to the government more than they currently do. It might be something like 20 or 30% of the funds that they look after. Where are they going to get the money? They're going to have to sell things in order to lend to the government. So they'll sell shares. In my work, in my presentations, one of the charts that I pull out is of the Dow Jones stock market index in the US. The Dow Jones is the index of the top 30 companies in America. In the 1960s and 1970s, as inflation really got going, total compound inflation over those roughly 2 decades was 80%, give or take. And in 1965, I think it is, the Dow Jones index stood at around 1,000. In 1982, nearly 2 decades later, the Dow Jones stood at around 1,000. So for nearly 2 decades, stock market did nothing while purchasing power was annihilated. And one of the reasons for that was because the institutions had to sell shares year after year after year and lend to the government. And incidentally, again, I'm not going to go into the technicalities, but take it as read. This lending to the government, as I say, the jargon is you buy bonds. As interest rates rise, bond prices that you've bought fall. Interest rates rise, bond prices fall. So these insurance and pension funds were buying bonds as interest rates were rising and losing money year after year on the bonds and making nothing on the shares. So if you were a pension fund holder or an investor generally in the 60s and 70s, by 1980 you're annihilated. And also, of course, property didn't do anything in the 60s and 70s. So think about that. The main asset classes that people invest in, you and me, pension funds. Most people here will have a private pension fund. Stocks and shares ISA. Perhaps some have even got a family trust. You invest in shares, you invest in bonds, and you invest in property. There are other things, but that is normally at least 90% of what you invest in. Whether you're doing it DIY, if you're doing it DIY, you maybe don't do that. But if you leave it to a wealth manager, a financial advisor, a stockbroker, an institution, and you look at it once a year or whatever, then I'm telling you that is what they're investing in. And in financial repression, stocks, bonds, and property will not cut it. The inflation will kill those assets for as long as you can envisage. And those are the assets in which you invest. The third thing that they will do, so the first thing was inflation, second thing is mandating to buy bonds, the third thing is they will bring back in capital controls, be it via CBDC, probably, but they will bring in capital controls. You know, in the 1970s, if you went on holiday, you couldn't take out more than £25. Now, even with 45 years of inflation, it's still not a lot of money. No more buying gîtes in La Dordogne. No more sending £100,000 in gold bullion under a Swiss mountain. They will imprison you financially in this country. Never mind the other imprisonments. So, property is not going to cut it. It's not going to increase your wealth, your purchasing power, your standard of living, as it did for decades. Investment funds are not going to cut it, as it did for decades. Here's an interesting thing. Has anyone got any idea, from early 1980s to 2020, has anyone any idea what was the average annual return of investment portfolios, be it Mr. and Mrs. Miggins or the multi-billion Teachers' Pension Fund? No, it was 5 to 6% per annum. Now, for 3 decades, as I said, inflation was around 3%. Happy days. You achieved returns of greater than inflation. Mr. and Mrs. Miggins were happy. The trustees of the Teachers' Pension Fund were happy. The investment industry was absolutely ecstatic because the money kept coming in and they kept managing it. Thank you very much. But since 2020, look at your statements of your long-term investments. Compare it to inflation. Go to your guys and say, how much money have I made in the last few years? And don't allow them to compare it against the other investment guy. Get them to compare it against inflation. And not even CPI, consumer, but RPI, Retail Price Index, which is the highest statistic we have. Now, I'm not saying that these statistics are accurate, but it's what we've got to play with. So compare your investment performance with RPI the last few years, and you will be shocked. I know what you're investing in. The question is, will you continue to do it that way? Because if you do, I guarantee to you, you will become even more impoverished, apart from anything else that they're going to do to us. Those investment portfolios worked for decades. They no longer work. And they won't work for the next 2 or 3 decades. Just like the 60s and 70s. Cash. You got some money in cash. It should be earning 4 or 5% before tax. So okay, it's 3 or 4%. And that's more or less slightly under where current inflation is. And you think, well, that's all right. And yes, it is for short terms. But what did I say that inflation is likely to be for the next 20 years? 5 to 10%. Some years will be higher, some lower. And on the basis that we can reasonably expect interest rates to be about 5%, which is a reasonable assumption, then cash will not cut it for the long term. Cash is perfectly fine for short term, but not for long term. Increase in wealth, increase in purchasing power, increase in standard of living. So the point of this presentation is, what do you do? Well, reduce your spending. I'm not saying it's easy, but cut your cloth according to your circumstances. That's one reality. It's one option. And by the way, the solutions are not mutually exclusive. You can do a bit of all of this. 2, increase your earnings. I'm not saying it's easy. You know, mortgages were 1.5%. And then as people ended their fixed rate mortgages, 2 million households in 2023 and 2024, they go on to variable rate or a new fix. Their monthly mortgage costs has gone up 30 to 60%. Not counting the food, the energy, the fuel, the clothing, the holidays. Do you know anyone who's at a 40% wage rise, net of tax? Thirdly, don't invest the way you have invested for decades. Because the investment industry doesn't want you to change. They're very happy that you continue to do what they've had you do for decades, because it works fantastically for them, but not for you in an era of higher inflation and higher interest rates. So instead, invest in the things that will achieve above inflation returns. In the 70s, in the early 70s, gold, 1 ounce of gold, one sovereign, was $35. By 1979-80, it was $600. Oil, on a long-term trend basis, has just gone up in price. Food, agricultural produce, they've just gone up. Long term. They call it shrinkflation. Do you remember wagon wheels used to be this big? And now... So, is it chicken or egg? Is it inflation or oil, gold, food, copper, iron, commodities? Is it inflation that goes up, or commodities that goes up first? Or is it commodities that go up first and then inflation? It doesn't matter. Commodities, gold, oil, copper, wheat, silver, iron, gas, beef, the things that you take out the ground or grow, they go up in inflation. Chicken or egg, doesn't matter. And in reality, the world has massively underinvested in finding and producing commodities for many, many years, and probably 2 or 3 decades. There is a massive deficit of supply compared to the demand for most commodities in the world. And the example I always use is there's a billion Indians who would love to have air conditioning. Gold. Today the price is $2,300 an ounce. It could go to 21, it doesn't matter. Let's say for simple arithmetic, it's $2,500 for simplicity. I am saying to you what I say to my clients. Gold within 5 years, it might be 4, it might be 6.5, but within around 5 years, gold will be $5,000. That's 100% gains, which in compounding terms is 15% per annum, which should exceed inflation. Within 10 years, and I don't think we'll see any higher than this, but within 10 years, you're looking between $5,000 and $10,000 an ounce. Because of what the governments are doing, borrowing, spending. Who remembers the lady in the 1970s who won the pools? What are you going to do with the money? I'm going to spend. And 10 years later she was bankrupt. Now there's a metaphor, isn't it? I am saying that within 10 years, you'll make between 100 and 300% on gold. Silver is gold's little brother. 1 ounce of silver is $25, give or take. $50 is a no-brainer. Within 5 years, I think you're looking at $100. In 2011, the last mega bull market for gold and silver, silver went vertical for 2 or 3 months. it went up to just under $50 an ounce. And it's still nowhere near that even today, but it's going there. There will be, within the next 10 years, there will be a couple of months at some point when silver just goes vertical. And I truly believe that sometime within the next 10 years, silver will be anywhere between $250 and $500 an ounce, but just for a couple of months. You're looking at, therefore, between 300 and 1,000 and 2,000% growth over the next 10 years. You'll annihilate inflation. You'll raise your standard of living. Oil was zero 4 years ago. It went up to $130 a barrel. It went down to the 60s. It's currently 75, 80. It could go back to 60, 50, doesn't matter. Expect within the next 2 or 3 years oil to be $200 a barrel as the inflation kicks back in, particularly after the presidential election in November. You remember when petrol at the pump got up to £2 a litre and it's come back to £1.50 because oil fell. Expect £2.50, £3 a litre in the next few years.
This is by design, right? This isn't just mechanics, this is a deliberate programme being rolled out in order to...
The reason why we are massively underinvested in commodity finding and production is because of the globalism, which they mask under climate change. Of course, 30 years ago it was global freezing, then it became global warming, now it's climate change. So therefore they say you can't invest in these companies. You can't invest in Exxon and Shell. You can't invest in gas. You can't invest in farming. You can't invest in copper mines. Bollocks. But that's the reason why we're underinvested, and that's why you are being hit in your pocket month after month, year after year.
Is it not true that JP Morgan is controlling the gold price?
It's a silver price, and yes, although the cartel is ending, that's why we are entering a number of years of gold and silver going to catapult, because the cartel is losing its power. If you are concerned about investing in commodities themselves, where would you put the gold? Where would you put the silver? Where would you store the oil? Buy the companies. Buy the energy companies. Buy the mining companies. Don't even buy the companies. Buy investment funds in your pension, in your whatever savings plans you have, your investment plans. Buy natural resources funds, mining funds, commodities funds, and the managers there will invest in the companies that they deem to be the best in those sectors, and then leave them to it for a number of years. Another commodity I particularly want to spend a minute on is something which for most people, in fact for 999 out of 1,000 people, is not even considered. Uranium is the yellow metal that we use in nuclear power facilities. Uranium too is in a mega bull market, rising market. All I'll say is uranium is about $95 a pound. Easily it'll be 200, 300, 400, maybe 500 at some point in the next 3, 5, 7 years. And that will also be reflected in the mining company share prices. So, You can either not change what you're doing with your money, or you can change what you're doing with your money. And my recommendation is invest in commodities, medium to long term. Q&A.
So, gold, buying gold and silver. So, I'm interested in buying gold and silver in physical form. What about CGT? Whether coins are better. Anything on storage, of course, is helpful too.
My understanding is that there's no CGT on gold bullion. That's my understanding.
Just the coins, you mean? There is on bars.
Okay, so therefore buy the gold coins, and then there's no CGT. I would have an exposure to both gold and silver coins, I'd probably invest 4-1 gold to silver if you're concerned about volatility. And by the way, volatility does not mean down. When you see on the TV, sorry, I'm allowed to use that bad word in this crowd. When you see the talking heads talking about the markets, and they always only come on the TV when the market's down, they say, oh, the market's volatile. The market's always volatile, because volatile doesn't mean down, it means movement. The market's always volatile. But they've brainwashed everyone into believing that volatile means down. So, if you're concerned about high volatility, then for every 80 pence in gold, have 20 pence in silver. And you can buy silver CGT free and VAT free. If you buy the particular type of silver, phone the bullion dealer and say, I want it VAT free and CGT free if you store it in their vault. And it costs you 0.5 to 1% per annum, which is nothing. I have used Baird, B-A-I-R-D. I have zero connection with Baird, but my understanding is that they are the closest to the Royal Mint of all the bullion dealers, and therefore they've got access to the best deals and so on. Madam, louder.
Is it the case that if, I'm not sure of the right word, but say the government collapses, they can take the money?
The government can do what the hell it wants. The government can kill people. It does kill people. So if it can kill people, it can do that. Some people in the room will be saying, oh, they confiscated the gold in America in 1933. No, they didn't. They gave people a month to sell their gold to the government. And 40% of it didn't get sold. It was buried in the back garden. Now, I think I'm right in saying that if you buy more than £10,000 of gold, then you have to register your details and so on. Well, look, ask around in our community for a good way to buy gold and silver. Do so. One moment, please. And I believe that if it came to it, I don't believe that the bullion, silver or gold would be confiscated. I believe that people would be paid the prevailing price at the time. Which means, of course, you wouldn't then gain from future growth, but why be concerned about something that happens after a possible event? Take action now. I think there was this lady was next.
My comment was just, if you buy more than £5,000 worth of silver in a year, they want your passport number and all your details. So if you keep it under that or buy it in cash.
So give them your passport number. Buy the silver.
Buy 4,009, a lot.
Yeah.
I was going to say one of the things they do in Asia, this is very common amongst families, and it's always the matriarchs, is that when they have money, they go to the markets, they buy gold, and then when there's a depression or when times are down, they sell their gold, and it's always gone up in value by the time they sell it to cover their costs. And another thing is, if you go into, remember when what's his name? Who's the boxer? Who's the
Benn?
No, Nigel Benn, what's he like? Mike Tyson. When Mike Tyson came to Brixton, did you see him when he got on the plane to go home? He was loaded with gold chains and gold rings. And why? Because he didn't have to pay tax on it, taking it back to the States.
That is an excellent point. Buy gold jewellery. Go to pawnbrokers. Make them an offer of 10%, of 10% below what they're asking. You might agree 5% below. But if you weigh it, remember gold is priced in weight. And with jewellery, they add on the artistic value and so on. But if you sell that gold to a dealer, they'll just melt the thing. It becomes part of a kilo of bullion. So artistic value is nonsense. So go to a pawnbroker, see the chains, weigh it, compare it to the prevailing price of gold, and I'm telling you, it's going to be about the prevailing price, and then make an offer. That's a great way of buying gold and storing it, and no one gets to know who's bought it. Madam.
When you were saying about the increase in the gold and silver in the time scale, I know obviously it's not totally accurate, but I've heard other people say about the silver that it will go up to a certain, then people have speculations as to what the high would be. You said you thought the high would last 3 weeks, but are you then saying, you said hit Sam, you said 500 for 3 weeks? I'm not holding you to that.
Yeah, I'll just say, and then you'll ask your question. So my belief is that sometime over the next 10 years, silver will trade momentarily for a month or two, anywhere between $250 and $500, and then it will just crash.
Now, I don't know. My question was why? Why do you think? So you really forced to...
Markets are funny things. Most people, most professional investors buy after something's gone up a lot.
So, so you would be better off if you had silver to sell before you thought the peak came?
Indeed, the most successful investors always advise sell early. A name which is of course in infamy, Nathan Maynard Rothschild, said always leave something for the next guy. It's absolutely the best practice. When you feel yourself an absolute genius, I'm amazing, look at all this money I've made, I'm going to make so much more money, I'm so clever, that's the time to sell. I'm not kidding.
Other precious metals, I see palladium go brilliantly after like the last 15 years. Platinum's right down compared to the price of gold. All the Ukraine rubbish, I see it going right back. What do you see? I think platinum's going to be brilliant. Am I wrong?
I've no idea. They are such tiny markets. They are so little invested in that one investor could move that market. So unless you are an absolute expert in one of those or either of those markets, steer the hell away.
They're used in scientific instruments, platinum a lot, and like combined
Great.
crucibles and stuff.
Great, so that will be reflected in the price.
Yeah.
But the price in a mega bull or a mega bear is nothing to do with intrinsic value or usage. It's what I was alluding to a couple of moments ago. When a market goes up a lot, that's when people start buying. When market goes down a lot, that's when people start selling. That is just the name of the game. That is the investing world.
Palladium went right up because
Great.
In Asia they use that as jewellery.
Okay.
So
Well,
that's what made me think that.
Well, maybe you're right, but they use silver in solar panels. They use gold in people's teeth. There are 101 reasons why you should buy or why you should sell. And ultimately, unless you're an expert in a particular market, steer clear.
I believe we're at a time where the past no longer represents the future. So where in your analysis is the place where the whole cabal freak system is crashing and going to implode on itself completely? And we'll have to start with a whole new system. I believe it to be soon.
when the likes of Greece went bust in 2008, they defaulted on all that debt. What that meant was they said, yes, we'll pay you the debt back, you lenders, over the next 50 or 100 years. That's one way by which you default, you crash. When Argentina would default on all the debt, they'd say, piss off, we're not paying you. And Argentina would become an economic pariah. That's a second way of crashing, of defaulting. Thirdly, they could tax us all to kingdom come. Well, they're not going to do that because they'll not get voted back in. So instead, they do it by inflation. And what you're saying, and many other folks say, that there's going to be a massive implosion, that we're going to go back to the caveman. I don't think we will, because that will affect the billionaires and Klaus Schwab, and they're not going to let that happen. Instead, they're going to inflate us away for decades, exactly as I've been presenting for the last hour. I don't think there will be a major cataclysmic implosion. I could be wrong.
Monetising, bills of exchange, money orders, international bills of exchange. How do you go about doing that?
No idea.
Does cryptocurrency fit into this anywhere?
I was wondering when that would come up. The bit bugs have come. Any other bit bugs?
There's a specialist over there. Sam, he normally presents on.
Yeah. Have we got gold bugs as well?
Well, we've got. I'm going to suggest to people, if you're interested in, if you get the light paper, Chris, thank you. Chris, he's presented here last year, I think it was, of Knight's Bullion, and so he's an awake chap. So take a light paper, give him a call, mention that you were here, and he'll look after you, so he knows what's going on that market.
So we've got bit bugs, gold bugs, silver bugs.
Bed bugs.
Isn't it great being a bugger? What? It's too hard to tell. If it works for an individual in this room, great. Do what it is, whether it's Bitcoin, Ethereum, whatever, one of the crazy cryptocurrencies. If you know what you're doing, great. It's entirely possible that stablecoin could be the CBDC, and it's above my pay grade. If it works for you, great. If you don't know about it too much, don't be enticed. Siren songs are very strong. I thought there was someone that no. Pete.
So I don't know if you saw my talk, but CBDC is a digital slavery system, right? So that's where they're going. That's what they're implementing. Right? When that happens, rather than have it happen, how do we stop it?
How do we stop CBDC?
Yes.
We don't.
Well, then what's the alternative? I'm not participating in it because that's slavery.
Sure, of course it is.
It's slavery.
Of course it is. If the politicians, the bankers, the central bankers want something to happen, it happens. As to when it's going to happen, that's the question. It's not going to happen this year. It's unlikely to happen next year. I would say the earliest it could happen is 2026. I'll get to you. 27. So the answer is physical gold and silver is my answer. There will be other people who have different answers. That's my answer. Young lady, get your finger up. Could mummy shout that out, please? Okay. Are we done? In which case, thank you very much.